I spent my life in the market, watching it, breathing it, living it day in and day out. And if there's one truth I've come to understand, it's this. Big profits don't come from complicated systems. They come from simple rules. Men ruin themselves by trying to outsmart the tape, by thinking they can invent a formula that will see what the market itself cannot. But the market knows. The market always knows. And it tells you plainly if you have the sense and patience to listen. Do you have that kind of patience? When I first started, I was just a boy scribbling down numbers on the board in the bucket shops. I wasn't wealthy, I wasn't educated, but I had eyes. I could see when stocks acted differently from the rest. I noticed how a stock would refuse to go down on bad news or refuse to go up on good news. That told me something. That was my rule. The market itself gives you the tip. Now, how many men ignore that? They wait for tips from brokers, from friends, from the evening paper. They think somebody else has the key, but the key is right in front of them, if they would only look. Don't you think it's strange that so many people refuse to believe what they can see with their own eyes? I never needed a book of complicated theories. I needed one rule: follow the line of least resistance. A stock going up will continue up until it proves it won't. A stock going down will continue down until it proves it won't. That's all. It sounds too simple, doesn't it? But simplicity is the hardest thing for most men to accept. They want drama. They want a grand mystery. They want to believe there's some hidden wisdom that only the chosen few can understand. But I tell you, the truth is out in the open. Do you know why men won't take it? Because simplicity puts the responsibility on them. If the market is telling you what to do, then you have no excuse when you ignore it. That frightens men. They would rather blame a false tip, a bad broker, or bad luck. They would rather believe the game is crooked than admit they themselves didn't follow the rule. Have you ever caught yourself making excuses instead of admitting you broke your own rule? I made fortunes not by being smarter than others, but by being more disciplined. The big money was not in the buying or the selling, it was in the waiting. Anybody can buy a stock. Anybody can sell a stock. But how many can sit tight while their profits grow? How many can resist the urge to snatch at small gains, or to hold on too long when the market has turned? That's where men fail. They lack the nerve to sit still when the rule says sit still. They lack the nerve to cut loose when the rule says cut loose. Tell me honestly, haven't you seen yourself get nervous the moment your trade started to move in your favor? I'll tell you a story. Back in 1901, Union Pacific was the key to the market. I bought it at 162, and it climbed to 172, then 182, then 200. All the while, I sat still. My friends thought I was mad. They kept telling me to take my profits. A profit isn't a profit until you take it, they said. But I knew better. The tape told me Union Pacific was still strong. The market was still with me. So I held and held until I made nearly $1 million. Now, what was the trick? There was no trick. Just a simple rule: never sell a stock that is acting right. Never hold a stock that is acting wrong. Does that sound like complicated science to you? And yet most people will never follow it. They'll invent reasons, clever little excuses. They'll tell themselves it's oversold, it must bounce, or it's gone up too far, it must come down. The market doesn't care what they think. The market isn't there to please their logic. The market does what it wants, and it shows its hand in the action of prices. All you need to do is obey. But can you obey without letting your own vanity interfere? I've seen men blow up their fortunes because they thought they knew better than the market. They thought the rules didn't apply to them. They wanted to prove themselves right. The market doesn't pay for stubbornness. It punishes it. Big profits only come when you are humble enough to say, I don't know anything. The market knows everything. I will follow. Have you ever lost money just because you couldn't admit you were wrong? Now don't mistake me. Following the simple rule doesn't mean there won't be losses. Losses are part of the game. You can't avoid them. What you can avoid is letting a small loss grow into a big one. That's the rule. Cut your losses quickly, without hesitation. Take them like a man. I always say losing money is the least of your troubles. Losing your nerve is the worst. If you can keep your nerve and stick to your rule, the profits will come. Do you understand why most men fail here? They hate to be wrong. Their egos won't let them. They'd rather carry a stock down, 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 just so they don't have to admit they made a mistake. But the market doesn't care about their feelings. It will wipe them out without a second thought. The only way to survive is to obey your stop. That's your shield. That's your protection. Every great fortune in Wall Street was built by men who had the courage to take a small loss and the patience to sit with a big profit. Can you imagine how much easier the game would be if you simply stopped breaking that rule? You see, the big money isn't in being right all the time. It's in being right when it counts. If you cut your losses short, your wrong trades won't hurt you. And if you let your winners run, your right trades will more than make up for the rest. That's the simple arithmetic of speculation. Nothing mysterious about it, but you must stick to it. Do you think you can hold yourself steady enough to do that? I remember times when the whole market went against me. I was wrong, and I took my losses. Then I stepped back and waited, and when the market turned, I was there to ride it. That's another rule. Wait for the right pitch. Don't swing at everything. You don't need to catch every move, you only need the big ones, the real swings. That's where fortunes are made. Have you ever noticed how hard it is to do nothing while others are rushing about, trading in and out, busy as bees but making no honey? That's the hardest work of all, doing nothing when there is nothing to do. Men hate it. They crave action. They think the more trades they make, the more money they'll earn. But the market pays only for being right, not for being busy. I could sit for weeks, even months, waiting for the moment when the rule gave me the green light. And when it came, I struck with size. That's how you make the big profits. Do you have the self-control to wait that long? The rule is simple, but the discipline is not. That's where most men stumble. They want certainty. They want the market to tell them in advance what will happen. The market doesn't do that. It only gives hints, signs, tendencies. You must act on them without demanding a guarantee. You must have faith in the rule because the rule is drawn from the nature of the market itself. Do you think you can trust the rule, even when your nerves are screaming against it? I've seen the greatest bull markets and the greatest panics of my time. I've seen stocks soar to the sky and crash to the cellar. In every case, the same rule held true. Prices act before news. The tape is ahead of the crowd. The man who watches the tape and obeys it makes money. The man who waits for explanations, who wants to understand why, is always too late. Do you see how that works? When a stock refuses to go down in a weak market, that's strength. When it refuses to go up in a strong market, that's weakness. You don't need to know the reason. The reason will come out later, after the move is done. But by then, the easy money is gone. The public is always the last to know. The market itself is always first. If you learn to listen to it, you'll always be ahead. Isn't that what you want? To be ahead of the crowd? Tell you, ruin themselves by thinking too much. They want to predict, to explain, to argue. I never argued with the market. I obeyed it. That was my only edge, and it was enough. Because the market doesn't reward cleverness. It rewards obedience. That's the difference between the speculator who lasts and the gambler who goes broke. Are you willing to stop arguing with the market? Every fortune I made, every loss I took, came down to this one simple law. Cut your losses, let your profits run, and never argue with the tape. Over and over again. It proved itself. Yet I broke it often enough to pay the price. Every time I thought I was smarter, every time I thought I could bend the rule, I paid for it in dollars and cents. You'll find the same. The rule doesn't bend for you, or for me, or for anyone. It stands firm like a law of nature. Do you see why fighting it is suicide? Now, there are men who will hear me say this and nod their heads, but the next day they'll go right back to their bad habits. They'll double down on a losing position. They'll sell out of a winner because they're scared of losing their little gain. They'll chase every tip, every rumor. They'll do everything except follow the simple rule. And in the end, they'll blame the market for their ruin. But the market isn't to blame. The market only tells the truth. It's the man who refuses to listen who digs his own grave. Haven't you seen plenty of men do exactly that? If I could burn one lesson into your mind, it would be this. The big profits are in the big moves, and the big moves are caught by following the simple rule. Don't clutter it. Don't complicate it. Don't water it down with theories. Keep it plain, keep it strict, and it will serve you as it served me. But only if you have the nerve, the patience, and the humility to stick to it. When I tell you that the market itself gives the clearest signal, I mean Jew. See that. You don't need the newspapers, you don't need the brokers, and you don't need the chatter from men who think they're in the know. The market will always tip its hand if you're willing to watch closely enough. The problem is not that the signals aren't there. The problem is that most men refuse to believe what they see. They want the market to fit their own opinions, their own desires, their own hopes. And when it doesn't, they turn away from the truth that's right before their eyes. Have you ever caught yourself ignoring what the price was telling you because it didn't match what you wanted to believe? When I was just starting out in the bucket shops, I had nothing but the tape to rely on. I didn't have a grand theory. I didn't know the ins and outs of company reports, and I didn't have men whispering secrets in my ear. But I did have the numbers, the movement, the action of prices. I could see a stock trading heavy when it ought to be light, or light when it ought to be heavy. That told me everything I needed to know. The price action itself was the message. I didn't need to understand why a stock was strong in the face of selling pressure. I only needed to know that it was. Don't you think it's foolish when people throw away what the market shows them just because they can't explain it? There is a natural tendency in men to demand explanations. They want reasons. They want to know why a stock is going up or down before they act. But by the time the why becomes clear, the move is already well underway. The market doesn't wait for explanations. It moves first and lets the newspapers catch up later. That's why the signals from the market are more valuable than all the commentary in the world. A stock that refuses to drop on bad news is telling you something. A stock that refuses to rally on good news is telling you something. That kind of behavior doesn't lie. It's the purest truth there is in speculation. Do you see why waiting for an explanation is just another way of being late? I've seen it time and again. A stock will show strength while the general market is weak, and those who watch closely will notice it. They'll say to themselves, that stock is acting different. But then they second-guess it. They tell themselves it must be some accident or some trick. They don't act because they don't trust what their eyes tell them. Then weeks later, the news breaks, the company has earnings or a deal or some development, and the stock explodes higher. By then the smart money is already in. The signals were there all along, but the public ignored them. Have you ever looked back and realized the market had been warning you, but you didn't listen? The market is like a man who doesn't speak with words, but with actions. His actions tell you everything if you're willing to watch. Think of it this way. If you throw a ball into the air, you don't need a professor to explain gravity to know it's going to come down. You see it with your own eyes. It's the same with stocks. If you see persistent buying that absorbs all the selling, that stock wants to go up. If you see persistent selling that shrugs off every bounce, that stock wants to go down. You don't need a reason. You just need to recognize the signal and act on it. Why do you think so many refuse to trust what's right in front of them? I can recall many instances in my own trading where the only edge I had was that I trusted the tape more than I trusted opinions. In 1907, during the Great Panic, stocks were falling apart left and right. Men were terrified, selling anything they owned just to raise cash. But even then, a few stocks showed resilience. They stopped going down before the rest of the market found its footing. That was the signal. Those stocks were stronger. And the market, and when the panic ended, they were the first to rally. The market told me where to place my bets, and it was right. Isn't it remarkable how much you can know simply by watching what refuses to behave the way you'd expect? The danger comes when you try to force the market into your own logic. I've done it myself, and I've paid for it. A man wants to believe he's clever, that he can outthink the crowd. He reasons that because a stock has gone up too much, it must come down, or because it has fallen far enough, it must bounce. But the market doesn't bend to his reasoning. The market shows its intention through its behavior, and when that behavior doesn't line up with your logic, it's your logic that's wrong. Because it's fallen so far, it must bounce. But the market doesn't bend to a man's logic. The market shows its intention through its behavior, and if that behavior doesn't line up with your reasoning, then it's your reasoning that's wrong. Can you swallow your pride enough to admit that? Signals in the market aren't complicated. They're plain as day if you have the nerve to look. The problem is that people don't like simplicity. They want confirmation, assurance, a safety net. They want to know the future before they risk their money. But speculation doesn't offer that. It offers probabilities, hints, patterns of behavior. That's all you ever get, and it's all you need if you respect it. The stock that behaves with strength is sending you an invitation. The stock that behaves with weakness is sending you a warning. Have you ever noticed how much easier trading feels when you simply follow those signs instead of arguing with them? The clearest signals are often the quietest ones. They don't come with fanfare or headlines. They appear when a stock shrugs off a wave of selling, or when it can't rally even with all the news in its favor. Those are the NTS that matter. But men miss them because they're too busy chasing tips or waiting for confirmation. They want to be told what to do. They want someone else to carry the responsibility. That's why they ignore the market's voice. The market demands that you think for yourself and act without excuses. Are you willing to carry that responsibility on your own shoulders? The truth is, the market itself is the only reliable tipster. Every other source is suspect. A broker may have his own motives. A newspaper may be late. A friend may be misinformed. But the market is never misinformed about itself. Its signals are as close to certainty as you will ever get in speculation. That's why I always trusted the tape above all else. Even when it went against my own opinions, I listened. And when I failed to listen, I paid dearly. Have you ever experienced the market shouting at you, only for you to ignore it and regret it later? Big profits don't come from knowing everything. They come from catching the big moves, and the big moves are always foreshadowed in the way stocks behave before the crowd catches on. That's the market's gift to you. The early signal. Miss it, and you'll end up chasing the move after it's already happened, paying too much, and taking too much risk. Catch it by trusting the signal, and you can ride the move from the beginning. Isn't that what every trader dreams of? To be early, not late. I've said it before, and I'll say it again. The market doesn't whisper. It speaks loud and clear through price action. It tells you whether a stock wants to go up or down. All you need is the courage to believe it. Over your own opinions, over the chatter, over the noise. That courage separates the speculator from the gambler, the man who profits from the man who perishes. Can you quiet the noise long enough to hear the one voice that matters? The market itself. Discipline, it's worth more than cleverness. I learned that lesson the hard way, time and again. A man can be sharp as a tack, quick with numbers, fluent in theories, but if he lacks the discipline to follow his rules, the market will strip him bare. Cleverness might win a battle or two, but discipline wins the campaign. Haven't you seen how many brilliant men went broke on Wall Street? They had minds full of knowledge, but they couldn't master themselves. The market doesn't care how clever you are. It doesn't care about your education, your background, or your arguments. It only rewards obedience to its laws, and those laws are simple. Cut your losses, let your profits run, and never fight the tape. Discipline is what keeps you obeying those laws when everything inside you wants to break them. Discipline saves you when cleverness tempts you into unnecessary risks. Haven't you ever felt the urge to prove to the market that you were right, even when it was clearly proving you wrong? Clever men fall into traps of their own making. They see a stock acting one way, but their minds tell them it should act another way. So they hold on. They add to losing positions. They try to outthink the tape. They believe they can reason their way out of a mistake. They invent explanations and comfort themselves with logic. But the market doesn't listen to logic. It listens only to discipline. A disciplined man cuts the position without hesitation and moves on. He doesn't need to prove he was right. He only needs to protect his capital. Isn't that the harder thing to do, to take a small loss instead of defending a clever idea? I've seen fortunes lost not because men lacked intelligence, but because they lacked backbone. They saw the signals. They had the information. But when the moment came, they couldn't act. They hesitated. They second-guessed. They believed they were too smart to follow a simple rule. Discipline means doing what you hate, selling at a loss, sitting tight while your nerves scream, refusing to trade when there's nothing to do. Discipline is dull. It's thankless. But it's the difference between survival and ruin. Can you see how cleverness without discipline is just another form of vanity? When I made my biggest profits, it wasn't because I discovered a secret the crowd didn't know. It was because I had the discipline to sit tight while others couldn't stand it. A stock would rise, and my friends would take their profits, congratulating themselves on their cleverness. They walked away with small gains, while the real move was still ahead. I stayed in, not because I was smarter, but because I was disciplined enough to follow my rule, never sell a stock that is acting right. That was all there was to it. Haven't you ever sold too soon and watched the move you wanted run away without you? Discipline also keeps a man out of the market when there's nothing to do. Cleverness urges action. It pushes a man to trade, to show skill, to stay busy for the sake of being busy. Discipline says no. Discipline says wait. Discipline knows there are times to act and times to sit still, and sitting still is often the hardest part. Men hate inactivity. They feel useless when they're not trading. But the market doesn't pay you for being busy. It pays you for being right. That's why discipline beats cleverness. Cleverness is restless. Discipline can wait. Do you have the patience to sit on your hands while everyone around you is buzzing with activity? Cleverness often breeds overconfidence. A man believes he's solved the puzzle. He believes he sees what others don't, and he risks too much. He stakes too heavily. Discipline would never allow that. When the trade goes wrong, as it often does, he's trapped. Discipline keeps a man cautious. It teaches him to protect himself. LF, to risk little, to guard his capital. Cleverness gambles. Discipline speculates. Can you see the difference in where those two paths lead? I'll give you an example. During one campaign, I watched a stock that was clearly under accumulation. The signs were obvious: steady buying, refusal to fall on weak days, tight trading ranges. My discipline told me to buy and hold. But clever men argued it was overbought, that it had no reason to be strong, that it was bound to fall. I listened to their reasoning instead of my rule. I sold too soon. The stock doubled after I was out. My cleverness cost me millions, but what really cost me was my lack of discipline. Have you ever let someone else's arguments talk you out of your own judgment? Discipline is harder than cleverness because it requires humility. It forces you to admit you don't know what will happen next, that your only job is to follow the rule and protect yourself. Cleverness feeds the ego. It makes you feel superior. But the market punishes ego. Discipline strips ego away. It says, I will follow the tape, no matter what I think. That's why discipline is worth more than all the cleverness in the world. Isn't it true that you regret your lack of discipline far more often than your lack of ideas? The simple rule is enough for the disciplined man. He doesn't need decoration or prediction. He only needs obedience. And because he obeys, he lasts. He survives mistakes. He endures losses. And he catches the big moves when they come. The clever man may win for a while, but sooner or later his vanity undoes him. I've seen it happen again and again. Every big loss I ever took came from breaking my own rule, not from lacking intelligence. And every big profit I ever made came from discipline, from waiting, from cutting losses, from sitting tight, from following the line of least resistance. Discipline is boring. Cleverness is exciting. But discipline pays and cleverness bankrupts. That's the hardest lesson most men ever learn. Obedience to the rule beats any prediction. Every man who ever lasted in the market learned that lesson the hard way. You can predict all you want. You can draw charts, make forecasts, and gather endless information. In the end, the market will do what it wants. The man who clings to a prediction while the tape proves him wrong is on the road to ruin. The man who obeys the rule, even when it contradicts his hopes, survives. Haven't you ever been right in theory but wrong in practice because you refused to obey what the market was showing you? My biggest profits never came from guessing the future. They came from obeying the rule when the market showed me what was already happening. A rising stock that refuses to quit is telling you it wants to go higher. A falling stock that can't find support is telling you it wants to go lower. That's reality, not prediction. Prediction comes from you. Obedience comes from the tape. Which one do you think pays better? Men love prediction because it feeds the ego. It makes them feel powerful. But the market doesn't reward forecasts. It rewards obedience to action. A disciplined trader can be wrong in his guess and still make money. A predictor can be right in his guess and still lose everything. Haven't you seen men cling to correct forecasts and go broke because they ignored what the market was actually doing? I once believed the market was due to rise. All the conditions seemed right. But the tape told a different story. Stocks were heavy. Rallies were weak. Volume favored declines. Prediction didn't matter. Obedience did. I stepped aside and was saved. Predictions trap you in opinions. Obedience keeps you flexible. When the rule says cut, you cut. When it says wait, you wait. No arguing, no second guessing, just obedience. Isn't that simpler than trying to lead the market? Union Pacific proved it again. Clever men predicted a top and shorted it. The tape said it was strong. I obeyed the tape. They lost. I profited. Prediction played no role. Obedience did. Prediction breeds overconfidence and excess risk. Obedience enforces caution. The market is never wrong. Opinions often are, and the man who learns that lesson lasts. The obedient trader waits. He trades less. He makes fewer mistakes, and his profits are larger. Haven't you ever realized that you would have done far better by trading less and waiting more?